I'll try to be as quick as I can. Mr. Chairman, welcome. Thanks for being here. You're both looking well. Chairman Gensler, do you remember, I know you do, back in October of 2020, Ant Group, a subsidiary of Alibaba, announced an IPO. And everybody was all a titter, going to invest in this extraordinary IPO because Alibaba is such a successful company. And the CEO of Alibaba got crossways with President Xi. And unsurprisingly, President Xi won. And he canceled the IPO, he meaning President Xi, for Ant Group, the subsidiary of Alibaba. And of course, after the announcement of the cancellation was made, Alibaba stock dropped about 8%. You remember that? I did some checking, and 2 days before the announcement that the IPO was canceled, a bunch of insiders at Alibaba dumped about $150 million worth of Alibaba stock, therefore avoiding an 8% loss, which other investors who didn't know about the IPO cancellation had to swallow. Insider trading. And I said, how can this be? Well, our law provides, I'm not blaming it on you, this is Congress's fault. Our law says that if you are the CEO of an American company and you sell your stock, you've got to report it to the SEC within 2 days of the sale, and you've got to report it electronically. You can't use snail mail. And you post it there in front of God and country on your internet, on your website. But a foreign executive doesn't have to do this. The foreign executive, he has weeks to inform you that he's executed an insider trail, and he can then send it to you by snail mail. And it's not even posted on the website. So Senator Van Hollen and I have a bill to basically say the foreign investors and the foreign executives have to follow the same rules as the American executives. I mean, insider trading is insider trading. Will you support that? We talked to my Democratic colleagues.
I think that you're addressing something, Senator Van Hollen, and you are addressing a gap in our current regime. We have about 1,000 of these foreign private issuers, and you're right that they don't have to currently file within 2 days electronically their trades, and I think that would help close a gap. There's another gap that's actually a 25-year-old rule, and I've asked staff to look at, called Regulation Fair Disclosure, or FD, when it was under Chair Levitt some years ago that he put it in place. A simple concept. If you share material non-public information to analysts or Wall Street or to the press, you've got to put it out to everybody. And it's helped protect the public. Fair disclosure. But guess what? There's an exemption there for foreign private issuers as well. So I've asked staff to take a close look. We'd have to go through notice and comment rulemaking to change that.
Good idea. Well, we're going to try to move our bill by UC, unanimous consent. I can't imagine anybody will object, but I've seen it happen before. So any help you can give us. Last weekend, I know I need to get a life, but I sat down and read Judge Englehart's opinion in the, I forget the name of the case, National Association of Private Funds Managers v. SEC. It's the private funds rule case. And I thought the opinion was, regardless of what you think about the result, I thought it was well-reasoned, well-written, far-reaching. And I wanted to get your thought, and I know the Fifth Circuit en banc can change it, and the Supreme Court might review it, but I wanted to get your thoughts about the consequences of the holding in that case, holdings, on your other rulemaking procedures?
I'm glad that you read the case, and of course it's in the Fifth Circuit, it's in New Orleans. So.
Yeah.
But we're still reviewing and thinking about our next steps. But I think that what it said, and Senator Haggerty and I were talking about it, is this new provision 14 years ago in Dodd-Frank, Section 913 of that,
which is part of the Advisors Act.
Part of the Advisors Act, you might remember it's 211H of the Advisors Act,
Yeah.
That talks about new authorities about investors. The court read that to be just about retail investors. And so we're looking at that, but if you're asking me, that means that narrows that authority. Of course, we do everything within the law and how courts interpret it, but we're just still thinking about the next steps. But it would narrow that authority to, I think as they read it, I'm using a colloquial word, retail investors.
One of the things, Mr. Chairman, that got my attention, and you can debate whether it's part of the holding or not, but the court seemed to seize on the fact that in terms of your fraud rule, based on the SEC's experience, out of the thousands and thousands of these private funds, you've only found 0.5%, not 5%, 0.5% instances of fraud, but yet the requirement to comply with the private funds rule was going to cause the private funds industry over $5 billion a year. Obviously, it was a cost-benefit analysis. That made sense to me. What do you think?
Well, with all respect to any court and so forth, we put certain things in a filing and we listed, I don't remember, a couple dozen examples. They're exemplars. We in our enforcement, and what we do in enforcement is we have cases when it comes to our attention and we pursue that fraud and then we either settle or we litigate. And so we were giving some of those examples. But again, we're still looking at that case. We're looking at the opinion, trying to determine next steps. But I think that in any area in the law, if we have examples of fraud, that's to help protect the public. And it's not whether there's tens of thousands of them, but what in that case, a couple dozen real cases that we were able to point to.
But the question was being raised, and I'm going to shut it down, Chris. Cost benefit, okay? And the court was saying that there are only 0.5%, half of 1% instances of fraud based on SEC experience. But the SEC issued a rule that was going to cost everybody $5 billion a year, and does that make sense? And I think it was raising that issue.
Well, we address ourselves to cost benefit, I think, in a very serious way as to what problem we're trying to solve. In this case, what we were trying to solve is information for the limited partners investing in private funds, and behind those limited partners, of course, are pension funds, endowments, your state pension funds probably in your states. To have quarterly reports to them on the performance fees and arrangements with other investors. And this was not meant to be public information. It was just private information to those. I think that would promote greater competition and efficiency in that market. But again, the court had a different view on this important Section 913.
Thank you, Mr. Chairman.